All attendees are in listen-only mode.
Good morning. Welcome everyone to Admiral Markets. My name is Chris. We're going to take a look at the Forex market at my charts and see what kind of expectations we have for this week, the last week of November in fact. Before we do that though, we have to explain the risks involved with trading and trading global financial markets and Forex in particular, of course. That could be substantial and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. So thank you for your attention on that. As always, we're going to be taking a look at some important steps, such as the trend, filters, deciding what the trigger is, and then the entry method, if applicable, using various tools and indicators, such as price action, fibs, trend lines, moving averages. Goody good. So we're going to start and take a look at the Forex market in just a second. But before we do that, in fact, I'm going to say good morning to Michael.
Good morning, Chris. Thank you very much for such a lovely introduction. Good morning to everyone and everybody who decided to join our webinar this fine morning. My name is Michael Onahop, and I'm a client relationship manager for Admiral Markets. In essence, my job is to create the best possible trading environment for all of you. I welcome you to another live trading session. We'll start with the cool trading stuff in just a few minutes, but before that, we'll have another fun episode of Fun with Forex. And today, I'm going to talk about most valuable companies in the world. So, how many of you can tell me what is the biggest company in the world by market capitalization right now? Those of you who said Apple, I applaud you. You are correct. Right now, Apple is engaged in two horse race with ExxonMobil for the first spot, and usually Walmart, General Electric, and Microsoft are right there in the mix. So what about the most valuable brand of the world? Those of you who decided to stick with Apple once again, you are right for the second question in a row. You are correct. Apple overtook Coca-Cola as the world's most valuable brand in 2013, according to Intra Brand Corporation. So when it comes to brand warfare, Apple is battling for the top spot with Google nowadays. So Apple, Exxon, Walmart, General Electric, Microsoft, Google, and Coca-Cola. There's in fact one thing which is common for all of those companies and all of those brands. This thing is in fact that CFDs, or contracts for differences, on all of those equities are available on Admiral standard account. However, there is one company which truly with truly huge market capitalization that is not available on Admiral standard. So, when we start tomorrow morning, I will tell you about this huge secret company that is so huge, but we don't have it on Admiral standard. What you can do is send me your guesses, what you think this company is, and why we don't have it in the CFD section of Admiral standard. I'll be waiting for your answers on mo@admiralmarkets.com, and those who answer correctly will receive a special little prize right from me. With this, I will leave you to Chris, who will continue with this morning live trading session. Thank you very much for your attention, and I will see all of you tomorrow.
Thank you, David. And Moga. I forgot about that. I had myself muted. So I was saying that basically we have webinars this week, which a bit different schedule than usual because Thursday is a bank holiday in the US, so low chance of movement. So we don't have a live session on Thursday, and we have our educational webinar tonight, not on Thursday. So that's what I was saying. I was also saying that basically today we only have CB consumer confidence, more or less, and next week we'll be back with the normal schedule. Okay. Be also aware that not only is it Thanksgiving in the U.S. and a holiday Thursday, but Friday is also the last day of the month. So, and this is the last day of the week, so this could be a bit different, maybe a bit different setting than usual. Alrighty. Euro dollar. Let's start with that one. Was looking bearish, now it's looking pretty bullish, in fact, in my opinion. But it is very close to a resistance. If you look at this down move, it looked like a pretty good break of this trend line. Right, we were looking at this yesterday, last week. The potential for this to break. It did break, and it made a very strong hook back to retest this top. That's why I took a sell personally yesterday, but it hardly moved anywhere. I'm still in it, in fact, but contemplating if it makes sense, because this downside really didn't go anywhere yesterday, and it rebounded pretty fast and is breaking again to the upside. So to me, this was bearish, and now price action is not confirming that, which means that slowly but surely it is actually more looking bullish. But the problem is it is very close to these resistances. So personally, I wouldn't go long right here in front of those resistances. But the fact that price has such a struggle to move down is definitely how do you say it, weakening the case of the bears in this case. So having some doubts if that is indeed the downside as I expected. All right, we did get the break. That did happen. This hook back didn't surprise me. Everything hooks back before it falls. But then yesterday it should have continued, and it didn't. Now, basically, it could still, although it sounds funny, this could still be downside hook back and a fall. And you know, the key level for that one would be 135.57, and we're very close to that. If it breaks 135.57, then then this was a correction, in fact, and it's moving like this. And we could have a breakout to the upside, and then the target could be, for example, this fib of the entire 4-hour downside. This could be a correction. Oh, this could be a correction like that to the 618 at 136.25, for example. And there would be maybe a breakout trade from this top to there. It's not an easy trade because we have a bigger top in between as well. And that's always difficult when you're so close to tops and resistances and fibs. There's maybe not so much space for a breakout trade. But maybe maybe on a lower time frame, if we get a smaller pullback, it could make sense to trade it up to that 618. But it's not an easy one. If it were to fall, it would be easier to trade because support is lower and there's more space towards support, and there's more wide open space. We're always looking for wide open spaces. I mean, that's always the easiest to trade with less resistances and supports. Price can move quicker in one direction, and yeah, that's the most pleasant trading. If it moves in one direction for a sustainable period of time, it's easier to stay in the trade. Okay, take a look at the daily. Yeah, we had a bearish engulfing twins, but bullish days after that. Doji, bearish day, but with a wick. is showing that a bit of an indecision here in this area, I would say, on the daily. Weekly chart, bullish candle last week, in fact. Second in a row, as expected. When I saw this one, expected a bullish one after that. And maybe we'll see this. Maybe that downside was a retracement of the weekly candle from our upside. It is possible. The euro dollar is really more of a range environment than anything. If you, of course, look at this last 1.5 years. In that regard, still an upside for one more downside to test these bottoms here would seem like, even if we do go up, right? That's why I think the 61.8 will be a resistance and a retracement to potentially fall to these targets at 131.50, at 129.50, and maybe even 127.50, which is equal to these bottoms. So in the long-term picture, I do think there's more space to the downside, but it doesn't have to happen now. It could happen from higher. Let's see if that indeed happens. Now, obviously, if it doesn't, then we will get evidence on lower time frames for an uptrend, and we'll keep buying it and going long. That's okay. If it does show some turnaround here, then we know why and we know where the targets are. Okay, so that's my weekly, daily view. We can take a look at the hourly again now. Price is above the moving averages, so on this 1 hour chart, it is more bullish, but as I said, it's close to resistance. Rich is asking what I mean, or could I explain wide open spaces? Definitely. Wide open space is something where if you look at a certain time frame, maybe one time frame higher than that, and you're looking for particular support or resistances like tops and bottoms, fibs, and trend lines, and the next support or resistance is quite far away, and therefore the likelihood of the currency price bouncing at a particular level seems far away. So for example, I see a resistance spot pretty close by here at the 61.8. So there's not much space. There is some. If there were to be, there is also a potential top in here. That decreases the space between, for example, the break of this red line to the next red line and then to this red line because of that resistance. If we would have another major level in between, there would be hardly no space between all these lines, and price could move up, but could move up shockingly and correctively because it's respecting all those resistances. There's not much space. Not always, of course, will price not move fast because there's support. For example, here there was support and price just decided to blast through it, and there was not necessarily a major wide open space. Let's face it, there was some space here, and then if we broke that level, there was some space to test this bottom. Now, in some cases, price, of course, can break through a support. It probably did get respected on a lower time frame, but we don't see that on this 4-hour chart. Despite the fact that price can, of course, break through support and resistances, that doesn't necessarily mean that we should plan on them being broken or we should count on it. We could in our TP, I'm not saying, that's fine. But in our calculations of R2R, or maybe I should say percentage chance of the trade developing, we should kind of like measure what is the space to the next support or resistance to see if it makes sense to trade that. If it's very close to a next support or resistance, then it probably doesn't make sense because the likelihood of price respecting that level is decent. So, for example, if we were here and we wanted to go long, it would be risky, right, with a 50 fib so close by. On the pound dollar, there was a trader who wanted to go long. Right in here. And I was saying that doesn't make sense because there's a 786 fib right here. For those 10 pips, and you're risking, I don't know how many, a lot more, that's not worth it. And a lot of people will be looking for shorts in here because it's 786. And not always will 786 get respected, but in my opinion, 2 out of 3 times, it probably will. And that's a pretty high statistic. So there was no space to the upside. If the 786 would have been here and there was no resistance in front of it, then we had a pretty good wide open space relative on that time frame. So what I mean is an R2R that is probably more than 1.5 to 1 at least. If we have that, if we have a wide open space where there's no major support or resistance in the way, and our stop loss versus our potential profit is more than 1.5 to 1 or more than 2 to 1, we can consider it an open space. And if it's more than 3 to 1, I guess then we can consider it a wide open space, because then there's really a lot of potential for the currency to move. When there's no support or resistance, it can move. The price could move more. So I hope that makes sense. Any questions regarding the euro dollar? Personally, the only way for me to trade it if it breaks and hooks back. That's the only way. The only way, because I wouldn't take it on the break because it's too close to resistance. Price is pushing up, but that would be breaking one of my rules if I took the breakout here because it's too close to the resistance. So if no one has questions, we can take a look at the pound in this case. Pound dollar from an intraday perspective is looking bullish too. This was probably a retracement back to our green band here, which is acting as support. And we are bouncing to the upside now. So from an intraday perspective, it's looking bullish, but let's see how that stacks up with maybe some longer term charts to see if we have any filters blocking the trade. The 1 hour black band is pointed down though. So we're at a talking spot, bounce or break. 4 hour chart, we're very close to resistance though. And this is, if anything, it's looking like a bull flag, funny enough. A massive bull flag. Look at that. Upside and correction, which could lead to the fact that if we push above this resistance here, that could be a breakout chart on this 4 hour time frame. So that would be that would be pretty interesting. A breakout of a bull flag of this magnitude to the upside could mean at least a few hundred pips, I would say, to test 167, which is a major resistance as well. We have 163.30 though, still as the top of this year, I believe. That could be an interesting development. Otherwise, if we don't break, we could be bouncing to the downside as well. So we're here too. We're at a break or bounce spot from a daily perspective. Interesting. Yesterday was a down day though, so this upside could easily be a retracement for more downside. And there is a potential good reward if we make that move with a relatively small risk. So this upside could, in that case, be an easy target for downside pressure. If we do break above this top though, then maybe not even this top, but actually probably we need really a break above 162.60. Break above 162.60 would be breaking these tops as well. And I wouldn't necessarily jump in immediately at 162.62, but if price pushes through that, then the likelihood of some bullish continuation is high. So I would be looking at lower time frames to see if I can grab a trade to the upside there. Before that happens, I would be a bit skeptical about the with the trend breakout to the upside here. I like to trade with the trend, but in this case, the upside is definitely running into a major resistance, and it could easily turn. And I'm not a big fan of reversal trades, but with so much resistance here, any upside, I would say, has at least some decent probability of finding that follow through to the downside. If not, then fine, small risk, let it break, and compensate that small loss with upside. But the R2R is pretty interesting potential to the downside here. But price at the moment moving up, but still. Alrighty, it's the 5-minute chart and the 15. Pretty bullish start, in fact, of the London session, even before the London opened. Somehow price is moving up pretty aggressively. Relatively wide range for the Asian session here. Today's high is at 161.74, it should be. So this up move, I would say, should find some limitation around 82, 84 for at least a retracement or a closing reverse. Let's see. But usually the first hour of London wouldn't see a major follow through in one go, especially if it has moved already from 44 to 84, which is a 40 pip run so early in the game, so early in the day. Normally does make a retracement before it maybe continues, because let's face it, these currencies normally don't make a run for it so early in one shot. If anything, I wouldn't be surprised to see small upside and at least a bit of retracement before moving up, or even falling all the way as a reversal and then up again. And especially the pound likes to make these spikes up and down before it settles into the movement of the day. So let's see how the pound responds to the 161.82 level. That's 8 pips above this. For those of you who watched the webinar, pound dollar characteristics, then you know that 8 pips is usually an interesting level on the intraday 5-minute pound-dollar charts. And sometimes there's a good probability that it could get respected. So let's see. When the world is still pushing, pretty impulsive move up on the 1-minute world and 5-minute, as I said. Let's keep an eye on this one. All right. Well, it's going to take some time anyhow. Let's maybe move on quickly to a new one. Maybe to the odd. I think always interesting. Let's take a look. 1-hour chart. Well, I had a massive fall, in fact, last week, and saw a lot of downside pressure in the market here on the odd, not only against the dollar, but also against the pound and euro. In fact, the pound odd broke to the upside with a very big move, a lot of momentum, and it wasn't a bounce or break spot. I had to admit that I thought that the chances for a bounce to the downside were pretty decent, but nothing of the sort. It decided to break. In any case, whatever maybe your preference, the currency was at a bounce or break spot, and it did break to the upside, so that was a good trade. That's why it's good to have these trend lines as a line in the sand, so you know what to be when. But this is the odd USD. In any case, let's talk about the pound odd later. It had a pretty good down run, and I wouldn't say why there wouldn't be any continuation of downside. It's pretty simple. I think the odd USD is not much doubt about this one. We can start with the weekly quickly. And we know that the currency stopped at the 50 fib, right, of this downside, indicating that if that is the turn to 50, we could fall to the bottom at least, and later on to this minus 272 at 83.40. It's a lot of pips to the downside. So that's the 50 turn for that fall. 83.40 is the target. If we then look to the daily chart, there was the potential chance of moving up to the 61.8% fib at 99.20, but that chance seems less likely now. Why? First of all, we broke out of this support level, which is the weekly support. All right, that's point one, and we got a continuation, in fact, even. And also, of course, we just have classical lower lows and lower highs. So no doubt about the bearishness. Obviously, of course, this could still be a support level and act as support, but they're still pretty far away from now. We can see easily when we fall to that level. And if we break that level, we can see continuation down to 83.50. All right. There was some reason, indeed, to think that at here we could still see continuation of that upside, but that didn't materialize. And it broke down instead, so the currency chose, and that's why we always have to let the currency decide what's going on. All right. It's easy. It's not about what we think or what we want. It really doesn't matter. All we are here to do is put lines in the sand and say, okay, if the currency gets here, it's going to bounce or break, and trade either way in that regard, right? No matter what our bias is, in fact. Yes, indeed, Vish. With that, we try to make our trading less biased to an opinion, but maybe indeed more, although of course it's difficult to take away all the bias out of trading. That is difficult, but we can make it as neutral as possible, indeed. And we don't have any emotional attachments to one side or another because it's if it's ranging, we either, depending on our strategy, we stay out or we trade it, in fact. Or if it's trending, we're looking for certain breakouts. It makes it more objective, indeed, definitely. So with that said, we can take a look at the 4-hour, and we can see that downtrend. We can even put maybe, for example, a trend channel like this. For example, or we can even do something like that. Let's see. Always difficult sometimes with these trend channels because price sometimes doesn't nicely fit within everything. You can do it like this for the moment, I would say. Something like that. So we captured most of the price with a small overthrow here. That's okay. This was a pretty good down thrust, of course. Moving averages are very steep, pointed to the downside, of course, as well. Oscillator is very powerful, but is green, which means the oscillator is moving back to the zero line, and that we are now in a corrective phase of price action. We had impulses to the downside, corrections to the upside. Impulses to the downside, correction to the upside. Impulse to the downside, and we're again in a correction to the upside. Every time price gets back to the zero line, it made a fall and was ready to continue with the impulse. So this is a pattern that I see very often. So logically, this is what I would be waiting for on the audio USD now again. What would be the most likely turning spot for that downside? Once price gets to the zero line and is ready for the downside, in my opinion. For example, we could put a fib on this downside. And we know that now it's stopping at 23.6% Fibonacci retracement. The next stopping place, a potential turning spot, is the 38.2. And I wouldn't be surprised in this particular scenario when the 38.2 is indeed the continuation spot for the fall down to the minus 272 at 90.30 and then the minus 618 at 89.15. Why is that? First of all, I'm expecting a bear flag correction here. So usually bear flags don't go further than the 38.2, max 50. Also, we do have a bottom here in play, and that could act as a resistance as well. Just giving another reason and supporting confluence for the fact that the 38.2 could be the bouncing spot to the downside. So with that in mind, let's take a look at the 1-hour chart, and we can see that price was very impulsive, staying underneath our black band all the way from the break. And the break happened on Thursday after our session, and the trend line was like this. That was an awesome trend line break and a good breakout trade, and we never got a hook back. We got a smaller hook back here, but never a bigger hook back. It was just one go. That sometimes happens. And it fell almost 300 pips, which is quite a lot on the 1-hour chart, in all honesty. Here too, we have a very strong oscillator reading, indicating no divergence between the bottoms. Therefore, no substantial reasons from the lower time frame perspective to expect any reversal as yet. So in that regard, any upside has a high likelihood of being a retracement and not a reversal. Is anything 100%? No, but this is a pretty decent probability. So that's the 1-hour chart. Back to the 4-hour, you can see how the trend lines here acted as a nice indication of when the impulse starts. So one more trend line like that, one more trend line where of these dark red ones right in here would be, of course, would be perfect for that downside continuation. So back to the 1 hour, and you can see that price stayed underneath the black band all the way until earlier this morning during Asian session. Price broke above it and is now making kind of a bull flag, indicating that on the lower time frames this is in fact looking a bit more bullish, right? Looking at price action as an impulse correction, impulse correction. Despite this downside and despite price staying underneath the black band, price is now actually showing some impulse to the other side and broke above that band, indicating that the band could now maybe be used as support instead of resistance for that up move to the 38.2, which we know from our long-term analysis could be the resistance spot. Now, what is maybe with the trend on the lower time frame is obviously counter trend on the bigger time frame. And therefore, the upside here, although possible, has its risks if you look at the 4-hour chart. And because I use primarily the 4-hour chart as my trend definition, then this is clearly in a downtrend. Personally, I would not be looking for longs, therefore. But yes, there is some potential here to continue up, but I would rather look for potential short opportunities when it gets up. This is the 15, and you can see that for a potential long, we probably need to break above these bottoms, maybe even from a very counter opinion point of view, could even bounce right in here, in fact. But that is pretty risky. The confirmation is a break above these tops, but you can see that the space is not much. If we look at the space, we were talking about wide open spaces just a few minutes ago. Well, this is not what I would consider a wide open space, because a break of these tops is only happens around 92.06 or 08, and the 38.2 is at 92.44, which means there are 36 pips potentially there. Even if the stop loss below the tightest stop loss below the 50-minute support is placed, then you're still looking at a 28 pip stop loss, and it's about 1.2 to 1, 1.25 maybe R2R, quickly calculated out of the top of my head, which is not really a great space. Plus, it would be a counter trend trade on the 4-hour chart. So those two things are making it that appealing. In fact, one could wonder even if this downside break wouldn't be a good trade. If that would happen, it could definitely be a good break to the downside. The only thing what we could see with this Aussie downside potential a bit problematic. Yes, it is with the trend, but if we look at the 4-hour chart, there is a chance that that 4-hour retracement isn't finished yet. So any downside could see a bounce up again. Oh, wow. Yeah, it definitely looked bullish, the price action. The euro, usually if it sets a tone early, it doesn't alter that much. So that, in a way, it does surprise me, and it doesn't in a way. I mean, it is interesting to see, of course, a 30-pip move pretty early in the day, as well, so close to resistance. But now that we've broken above this red line, well, that bearishness that I was anticipating yesterday, which did happen a bit, but it just didn't go far enough. And I was already saying that because of the lack of enthusiasm to the downside, really had some doubts there whether we would get the follow-through, and it didn't indeed. Interesting. Well, thanks for those heads up, Kaylin and Lau. With that said, yeah, pretty pretty good chance now of continuing up. Obviously, there is still maybe this resistance in play that could stall it for a bit, but we'll have to see how price responds. Let's take a look at the Camarilla indicator and see what that is saying. As I said, I would like the downside trade more because for me it would be easier to tackle. The upside has a bit more risks involved, in my opinion, but it doesn't necessarily mean, of course, that it wouldn't be good. We'll have to see how this correction handles itself because there will be some pullback. The question is, will it be worth it to attempt a long in here for continuation? Probably yes, I would say, but I want to be careful that this wasn't just a spike for more downside. Still, even then, still a bit cautious of that fact. Although the euro usually doesn't happen that often. How about the pound? Wow, pound pushed through that 8 pip level. That doesn't happen often, or quite rarely, in fact. So this is more bullish than expected. And the AO is reaching already a pretty high level on this 5-minute world. So even though it went through the 8 pipper, don't forget that this move started already 1.5 hours prior to London and is a pretty good impulse. So if this goes back to the zero line and we get a bull flag like that, once we get to the zero line, then looking for longs makes sense in my opinion. And we'll probably get one more move up on the pound dollar today. Jumping in right here makes a little sense in my opinion because we're exposed to a pretty big risk. We're exposed to a retracement sooner or later. If it's not now, it could be 10 pips higher from now. And that retracement could take a substantial period of time. It could take 2-3 hours. It could move up a bit, then go into a big sleep like this. Well, not a sleep, but it's, pretty relatively small up and downs maybe. We also have inflation report hearings, I believe. That could send some spike on the pound dollar up or down. We don't know. But if it does something like this, then we could see on the intraday time frames, I would say one more push up if this is back to the zero line. Something like that would indeed catch my interest, but the upside here, not now. Even though it went through the red line, it was just for me more of informational purposes. If it indeed would respect that level for downside. All right. Kayla is asking what happened to the bearish divergence 4-hour. Which one? Euro dollar? Let's take a look. Bearish divergence. I don't see divergence. I do see. You mean between these bottoms? These bottoms or these tops here? Bearish divergence. No, you're talking about bearish divergence. So that's the tops. Well, these tops, don't forget that this is not divergence, this is convergence, right? We got a lower high here, and here we also have a lower high, which means the oscillator is confirming what price is in fact doing. But I'm not sure if that's what you mean or not. So let me know. Maybe you're talking about a different part of the chart, or I misunderstood you somehow. But this is how I look at it in any case. Okay? So here we had, of course, indeed, we did have bullish divergence between these bottoms, but price has already moved back to the long-term moving averages and therefore has, in a way, met the minimum requirement or expected retracement after that divergence on this time frame. We'll talk about moving averages, by the way, tonight, and what role they have exactly in my trading as well. Although for those of you who are here regularly with the live trading room know already a decent part of that. Okay, Caleb. The MACD, well, I can add the MACD. I don't think, the fact that if there's anything, if there is, the only thing that could exist here is hidden divergence. But I can put the MACD on. It isn't on the awesome oscillator. We don't have hidden divergence here. Let's see. This is a bit higher indeed. That's true. Yeah, but what that is, that would be a hidden divergence though, because price is lower, the oscillator is higher, so that would be hidden bearish divergence indeed on the MACD. It is quite small, maybe. That's why maybe it's not being that used. Not sure. Well, let me say it this way: if the price is giving a lower high, that's for sure. That's a fact. And the oscillator on the MACD was higher. So there is divergence, but it's a different type, right? It's if price makes a higher high, but the oscillator doesn't, then it's divergence. But anyhow, let's see. Oh yeah, sorry, Rich. I got distracted because of the euro effect, I think. But yeah, thanks for your comment, in fact, Rich. The Aussie, then we'll go to the dollar yen. The Aussie on the daily chart could definitely be a head and shoulders indeed. Oh, no need to be sorry, Kayla. It's just I'm just curious in your comments, that's all, and I'm always interested in what you see, and if you have any charts, by all means, please send it to me. So that's all. I'm actually very happy when you send me comments. So thanks for that. And Rich too. This is indeed looking like a head and shoulders to me as well, and it looks like we broke below the neckline, adding to another factor why this could be very bearish. All right, so we are breaking to the downside. As I said, that for me is a bit too early still. I would expect some upside still, and then a sustainable break. So yes, I am bearish, but not at this moment, personally. But I will keep an eye on it. Pound dollar. Let's see. Someone was saying pound is up right now. Oh, that was a while ago. Sorry about that. Yeah, pound is up at the moment, but it is close to resistance. So got to be careful of that. Let's see. Any other comments? USD dollar yen. Yes, we'll take a look at that. And Life is asking or stating that I use just daily 4 hour and 1 hour. Well, it is I use it a lot, but for entry purposes I use 15 as well, and maybe a coincidental, I don't know, probably do concentrate mostly on that, but I do also look at the 15, I believe, or at least I think so. I don't measure it really, I do more analysis on 4 hour and 1 hour and daily, that's true, but then I do tend to zoom in once in a while at 15 if it makes sense and there's a good situation occurring, like a good breakout, then I would zoom into the 15. Okay, so dollar yen. Good morning, Darshan. Yeah, we can take a look at the pound and its crosses as well. Darshan is referring to pound yen and pound odd. So we could take a look at those as well. We'll take a look at the dollar yen quickly. So we had both the pound and the yen side covered. Dollar yen is while it is looking bullish at the moment, obviously we still have a resistance at 103.70 remaining. That is not a level that we should automatically assume will be broken without any fight. All right, there could be still a looming potential, maybe even danger for the bulls, if you like, that this could in fact just be a correction for more downside down to the 50 fib at 90 or 91 and then upside. That could happen. So, you know, this is an important level. If we break through that with a pretty good thrust and keep making bull flags and breaking, then obviously the upside momentum and trend is full in play. And I think that should probably be the main scenario for this breakout, because it is a potential triangle here that has been broken out. Well, let me say, just stated, it is a breakout. We are moving out of it, but we still have to be realistic and understand that that could cause this as well. So, yes, bullish, but that is my main analysis. But still, you want to be on guard for any potential, you know, danger or potential bigger reversal to that level. If I used the word danger too many times, sorry for that. But yeah, there are, I guess, a lot of dangers out there. But let me say it this way: the resistance is at 103.70. That's still pretty far away from now. So there's a lot of space still to that level. So don't get me wrong. There's good trading to that level. Just want to let you understand that nothing lasts forever. Even a good breakout like that. And don't want you to necessarily assume that this is upside up to 125 without any potential resistance. That's all. Okay. Until then, though, bullish, and I have been bullish already for a very long time. If you would have followed my wave analysis since the beginning of October, you knew that I was looking for a wave E turn right in here, then for a wave 1, 2, and a lot of 1-2s I've been mentioning. That's exactly what has happened so far. So the bullish case, what I was expected at the blue circle, has been materializing and unfolding fully as planned. And I'm not sure if anyone followed that, but it was a classical 1-2, 1-2, 1-2, 1-2, 1-2, and now getting waves 3s and 4s as expected. All right. From the weekly perspective, by the way, this breakout could mean a potential continuation of this impulse prior to that, right? Just for those of you who don't know that, this is back to the zero line as well, this oscillator, meaning that this retracement could be finished as a triangle. That was a pause and the breakout. We could see the continuation up to the -272 target at 110. Then the -618 and 120. So that with that breakout, that potential is there. So back to the daily, you can see that breakout and it's gaining some momentum. So there's a good chance of continuation. 4-hour chart and then 1-hour chart. 1-hour chart, we can see this is a support level right in here. It's a in a way, a supply and demand zone, which we'll be talking about tomorrow, in fact. This is looking like a bull flag that is, the price is taken back to this support level. 50-minute chart. Any break above this level would be, in my opinion, a good continuation. Let me take a look at the 1-hour chart again. Recent price action is a bit flat here, but let's see. We've had angles to the upside on this black band where I have those green lines here. All right, so wherever the blue lines are, that's where it didn't have an angle to the upside. And when it didn't have an angle to the upside, you can see that there was a high likelihood the price went back to the long-term moving average. So with this dollar yen, I do have a bullish bias, but maybe this bull flag could extend itself into just a bit bigger zone before it breaks out. That's my only thought at the moment when looking at these time frames. So in my opinion, I would prefer to trade it if we get a breakout like this, wait for some correction, doesn't even have to be too big, and then take the next breakout. That seems to be less risky to me. That's what I'll be waiting for in the dollar yen. All right, so let's take a look at the others now. Pound odd had a very, very big breakout, in fact. We talked about that at the beginning of our session. And the line is still here. This is the breakout, the bounce or break spot we were talking about. And the answer was break. And boy, oh boy, when the pound odd breaks, in this case, it was really a dramatic 600 pip rise, in fact, which even for the pound odd is quite a decent run on this 1-hour chart. If we go to the 1-hour chart, you can see that. And we've reached the zero line after this momentum up. The momentum burst to the upside was so high that the oscillator really reached out to the sky. And with that said, a break of this top is very likely. So we can put a fib easily on this upside. We didn't quite get to the 382 somehow. So let's start with the daily chart. Here we obviously see also a breakout of this line connecting the tops. Here we see an impulse, correction, and now slowly but surely started and then the break. We can put a fib therefore on this upside, and we stopped at a 23.6% Fibonacci retracement, and that means the target is the minus 272 target at 183 for the moment. So that to me seems like a nice wide open space. In fact, if I want to give an example of wide open space, that would be above yesterday's high up to the 183, about another 600 pips. 4-hour chart looking very trendy, of course. Oscillator here too, very powerful reading, getting close to the zero line already, just like here and here. Now looking at the 1-hour chart, we could push up and break this top before the 4-hour oscillator returns to the zero line. So in that case, something like this could happen. And then we'll get a bigger retrace for one more upside. Personally, if I want to trade it to the upside, because it is definitely, of course, an uptrend, it is a breakout to the upside on the daily chart, weekly chart. It is a very impulsive move on the 4-hour and 1-hour chart. There's little reason to not to be bullish, or at least I haven't discovered it with my tools that I use. So the only thing is when and where, and personally I would be waiting for this hour to finish. Let's see if we get a twist on the angle of the band here, for example. 1 second, let me get rid of this fib. Let's see, this band getting some angle if it does close, probably even an hour after that. I want to see the entire band point up, not a small bull flag on the 15, and I would easily take that trade to the upside. So let's go to the 50-minute world. What I think what I would be waiting for is this momentum burst basically to subdue, let it ride out. That probably will take maybe another few pips. Maybe we'll do right here. We'll get a small bull flag on the 15, and then I'll gladly take the next break. That's basically what I'm hinting at. No reason to be bearish, as I said, looking at all these time frames. Only reason to be bullish, but personally would rather wait for that correction and then take it up, because yeah, I'd rather plan for that correction and break than just jumping here in the middle of the playing field, in fact. So that's what I would be waiting for. How about, what was the other one? Pound yen. Pound yen, in fact, different than the dollar yen. The dollar yen has been correcting in a triangle, a big triangle, whereas the pound yen, after its big impulse, made a smaller correction and broke up, made a smaller correction, broke up. So this has been pushing up more than the dollar yen, in fact. Day chart. We've been talking about the break of this level and expecting a hook back to the level. It did hook back, but it didn't get as deep as, well, one would have maybe hoped for. It was 160. Sometimes it doesn't go necessarily that deep, though. So you can see sometimes it bounces off a support level earlier. In this case, 160.38, because especially if it's a big support level, price might not be able to get back there because the buyers already stepped in earlier. Alrighty. After that bounce at 160.30, let's see, we got to bounce 500 pips up. I will really have to take a look. Where's the bigger target on this weekly chart? Oh, I already have it here. It's at 167. So any longs up to 167 are okay. Once we get closer to 167, we have to be obviously more cautious, because price is at a very major resistance. So that's something we have to be aware of and take into consideration. 167 is a key level, in my opinion. So daily chart, very bearish, very bullish, excuse me, sorry. Higher highs, higher lows, no doubt about that. Momentum's to the upside here too on the 4-hour chart. Price is very far from this black band here on the 4-hour chart. Tremendous impulse. Look at the power on the oscillator. So even if this retraces back to the zero line, we have at minimum one more break to the upside. Back to the 1-hour chart, or down to the 1-hour chart. No divergence here either between these tops. The oscillator is also back to the zero line here. Obviously bullish, and a little doubt about that. It's just a question of entries and exits and when to enter and targets, in fact, at the moment. Looking at the 4-hour world, one could wonder if maybe a retracement at least to the black band couldn't happen. But if you look at the 1-hour world, one more upside would seem not so strange. So with that said, here too basically I'm going to repeat myself as the pound odd. The 1-hour world I would look for a confirmation of a good impulse here and a small bull flag on the 15 for continuation to the upside. It's in my opinion the same dynamic. In fact, it is an uptrend. It is an impulse, but there is maybe a potential for a bigger retracement, just a tad bigger retracement, or continuation. To judge which one of those two will happen more likely, most likely, I would want to see more confirmation, which means a clear turn of this band, like it did here, where it had it pointed to the upside. Right here, it was downside or flat, pointed to the upside. We got a small bull flag here, like this, after this impulse, and then the next break. That's what I want to take. So just to give you a previous example, so that you know what I mean. That's what I would be waiting for, is this break where I have the green circle, green line there, something like that. As we can see, taking it earlier where I have the blue circle, or let me make it pink so it's easier to see, was a bit early, like here, because we still got 1, 2, 3, 4 hours of sideways move, a bull flag before we continued. So that's what I would be looking for. Then there's the question about imminent pound news. Yeah, that's I'm not really too informative about what could happen with this inflation report. I think the governor also will be speaking of the Bank of England. So I would have a little to add to that. Anyone else maybe? Does anyone listen to the radio, or has anyone read something about what could happen during this news event? Maybe we can get some feedback from others. Personally, I am not too sure. I didn't read anything about it as yet, so I'll just see how price responds to that event, I guess. But unless someone has something they want to share, that would be great. And Kalen is saying, if the D channel breaks in the pound yen, do you see bigger targets? We can take a look at that. Let me take a look at the daily chart first of all, to see if that fib I put on the weekly chart makes sense, just to confirm that that fib. Well, it made sense at the time, but one could even say that this is still one move up, in fact, because the oscillator hasn't returned to the zero line. In that regard, I rather actually squeeze the daily chart, not maybe that much, but like this, and take a look at which target is still to be hit. One second, I'm just putting on the fibs here. Even if we would look at the fibs from a different perspective, I had only one weekly fib on, but even if we leave this fib on, for example, this was the most impulsive part where we went down to the 382, or if we leave this fib on where we went to the 50 after the swing high, swing low, or we put the new fib on from this breakout, we went to the 382, all those targets are lining up more or less between above 167 in any case. So one is at 167.50, one is at 168.50 or 70, the other one is even higher at 170. So if we do break above 167, we could see some space, maybe two higher targets there, maybe up to 170. If we go back to the original fib that I had on, I know these are a lot of fibs, one second. That minus 2 is at 167.30. If we leave the same fib, the minus 618 is all the way at 180. That's a pretty big move, with some targets here around 175. We could even put a fib on this entire down move. What do we got here? We got a 382 at 167.50, so that could be also a reason. An extra confluence at 168, and the 50 fib is at 184. So it's of course not easy with such an impulse to say what could be the target here, because we have such a grand move up. But to me, looking at the confluences, I would say 167, 168, then around 175, and then probably even up to the 181 and the 185. So once we break 167, 168, there will be 700, 800. then another 500, and then maybe another 100. Roughly speaking, that's what I would say with the fibs at the moment. Of course, there will be smaller targets in between eventually if we do move up like that. But these could be the major targets. Yeah. Euro dollar has a bit of a wick. How about the pound? Yeah, it's kind of consolidating here slowly but surely. And the oscillator is kind of pulling back a bit to the zero line. At least we have red bars. We could still see a pop up, but this will eventually return to the zero line. And the dollar yen isn't getting the follow through. As I said, it could turn into a bigger bull flag. So I'll be rather waiting for that, as well as waiting for bull flags on pound pairs as well, and Aussie, but a bigger flag. This is just, in my opinion, a likely part of a bigger bear flag, or at least that's what I want it to be, because of the 4-hour chart. But then again, I will keep an eye on this break. If it breaks nicely and we get a good hook back, I might sell it in there already. All right? Or depends also on how this breaks. If it breaks very impulsively like this, and we get a 15-minute bear flag, then I have nothing with trading it to the downside again if it breaks one more time. If it does move down like this and then starts to bounce up like that, then we know why, because it's making a bigger bear flag. Well, I guess, anyone have any preference still? Maybe the euro yen or euro odd, I don't know. Probably, yeah, euro odd is looking pretty similar in fact. Euro yen is in fact a breakout trade that could make sense already, in fact. If you look at it this way, it's actually breaking. This is, in a way, had already the impulse here and a correction, and is now continuing that breakout. Let's see. Break, hook back, continue. A bit choppy maybe, but it is turning here with that angle, dragging the moving averages to have that angle. A 5-minute chart, let's put a fib on this. Yeah, I wouldn't know why not. It wouldn't be worth a risk maybe at around here. Could be worth it with a small risk in my opinion for a potential bounce up. Why not? It is back to support. And therefore could get that kick up higher. On this 50-minute chart, we are making higher highs, higher lows. So if we test this 50-minute bottom, there's a high likelihood of at least some move to the upside, even if we get a failure here. So that would be the advantage. So that's from the 50-minute world and 1 hour. Let me take a look if there's anything more to see on the 4-hour and daily chart. This 4-hour chart moving up a lot. Daily chart had a bit of a struggle maybe upon the break, but eventually pushing through, just like the pound yen. So what could maybe be the bigger target here? Let's see. Let's take a look at the daily as well. I'm going to put the targets on this entire upside to see what target we have left at the moment. I'm moving from target to target, in fact. On this daily chart. I'm moving along the fibs when they do hit. What do we got left? Let's see. We're right at the potential -2 target, 272. In fact, if we break above the -272, we would have a lot of space to the -618 at 143.35. Yeah, we stopped right at that level here. You can see right at that -272 target, which could cause the currency maybe to give a bit bigger pause before moving higher, or maybe even retesting these tops. So lower time frame looks bullish, but there is reason to be to wonder from a bigger time perspective whether we couldn't get maybe some pullback here before continuing in this uptrend. Although there isn't necessarily divergence on the 1 hour chart. So maybe we're a bit more careful with this pullback in that light. And well, we are moving in fact pretty fast now. And challenging this bottom. So that changes the longer time frame does put a different spin on it. Let me take a look at the euro. It's a place where, of course, we have a top that's broken, but a next top right above it. So those spots are good waiting spots in some cases. Dollar yen is moving to the downside as well, so maybe we'll have to be a bit more patient with the yen charts. and indeed wait for a bigger bull flag, as I was already expecting on the dollar yen, and already mentioned earlier. Maybe back to this level first, around 100.70. No, 100.90, right in here. The bottom here and the long-term moving averages. That could happen. So if the yen will make some bull flag, how does that impact the pound yen? That means the upside could potentially be, as I said, I want to see a clear break, otherwise I wouldn't trust the upside as yet. Doesn't look like we're going to have that right now. Pound dollar is also correcting as expected. So there could be maybe some bit more corrections on the yen, dollar yen, pound yen and euro yen. In any case, for me, at the moment, there's nothing to trade, to put it short. Pound yen could be, pound dollar could be the exception if we do get a bull flag, and the pound dollar. If we get a bull flag, and odd USD if we get a bear flag, or if we bear flag on the 4-hour or on the 15, either of the two. Yeah, that would probably be the top three at the moment. Euro New Zealand and Euro odd. Let's take a look. Euro odd could be the same as the pound odd indeed. Looking for a bull flag and the next break. Same story. So that's just as good. Euro New Zealand. I would rather stick to the Euro odd personally. Euro New Zealand is seems quite choppy relatively. Probably similar to the Euro odd. We can take a look at the odd New Zealand to see which one of those is doing better. 1 second. I haven't looked in the odd New Zealand since a week ago, I think. So need to catch up here. I remember looking at this consolidation, and it did break, let's see, to the downside, hooked back, and then continued. So it is looking, of course, more bearish than bullish. So that's kind of confirming what I was already thinking about the Euro odd. Looking at that, there seems to be more Euro odd strength than Euro New Zealand. Of course, the odd New Zealand could correct to the upside, but the trend is down. There's no doubt about that. So back to, yeah, that was about it. Basically, dollar yen, I like the continuation after the bull flag. Odd USD down, Euro odd, pound odd primarily, and maybe even pound dollar. Life is talking about the Euro yen, and didn't see that. Let's see. It is getting luckily some bounce. So anyone who decided to take along in here, you can always close it out for zero now. The long-term perspective is not looking that fancy to me. Plus euro dollar is still pretty close to this resistance. Don't like the position of the euro dollar that much. I know that this is bullish price action, but I do like my trend lines, so that doesn't match really, as you can see. And the yen, the problem is the yen is also making a bit more bigger bull flag. Once that bull flag is finished, then it would be better. Well, that wraps it up for today. If you have any questions, still let me know. Otherwise, tonight, sorry, misswallowed there. Oh my God, horrible. Sorry for that. Tonight we have the moving averages. That's what I wanted to say about how we use it. That's at 5 p.m. GMT or 6 p.m. Central European Time. Oh, that was nasty. Okay, the Kiwi. Well, Kiwi is quite a range bound. Looks like a potential head and shoulders, if anything. Neckline is around here. Looks like we broke through it but went back up. Could be a hook back after the first break for more downside though. But then again, it is still within the range. It looks like a first break of the neckline. But if we do break the second time, there should be some follow through at least this time around to maybe challenge these bottoms. Otherwise, we're still in this range, although it is indeed a potential head and shoulders. And the 4-hour chart just looks pretty choppy, in fact. But this could be the first drop for more downside. Oh yeah, gold. XAU-USD, sorry, broke this bottom indeed. So there could be a potential triangle break to the downside. And we could see a challenge of this bottom. But the break so far, not getting that much follow through. Not sure if the downside is ready as yet. It is obviously in a downtrend and it broke support. So I would be looking for a potential continuation trade to the downside. It doesn't look ready as yet because this is a pretty strong retracement. So I would rather see some triangle first or even a bear flag before taking it to the downside. I want to at least see some support on the lower time frame being broken. And the next support on the lower time frame is here at 1237. Any downside could still see a bounce above 1237. So that's what I would be waiting for personally if I would be trading gold. I don't, but if I would. Does look bearish, but would want to see a bit more weakness on the lower time frames before probably that bearishness could unfold itself for a retest of the bottom here at 1179. Let's take a look at the odd. Rich has a question on that. It looks like potential head and shoulders on 4-hour chart. Agree. Definitely does. And 1-hour chart looks like inverse head and shoulders. Yeah, also agree. It, of course, hasn't been confirmed yet, but it could happen. That's why wasn't too enthusiastic about this break here as well, because I wouldn't be surprised if this correction indeed corrects longer and retraces to the 38.2, and then an inverse head and shoulders like this would make perfectly sense and could indeed unfold. Totally agree with you, Rich. We could have indeed a 4-hour head and shoulders pattern and 1-hour inverse head and shoulders pattern that could push price up to the 38.2, and then we see the turn. If it doesn't, if we see a move and a smaller bear flag like that and we break again, then it probably isn't and we're just breaking to the downside. So I agree with you on that one. So with that said, folks, I will wrap it up now and look forward to see you tonight then. Hopefully, I do think it's going to be interesting information with the moving averages. So hope to see you then. And otherwise, maybe tomorrow. Okay? Cheers.
The organizer